A good way to understand these concepts further is to examine individual stock charts during overwhelming bullish, bearish, volatile, and neutral periods in the broader stock market. The broader stock market can be represented by a major stock market index, for example, a chart of the S&P 500 or Nasdaq 100 during bearish times, such as the stock market crashes in the years 2000 and 2008, or shorter-term downtrends, like from August 2018 to the 2019 New Year, or late February to mid-March 2020. For a bullish comparison, compare individual stock charts to a broad stock market index from January to March 2016, or April to September 2020. Examine neutral and volatile periods by comparing individual stock charts at various times from November 2014 to November 2015, especially the effects of the bearish and volatile spike on August 24th, 2015. Most stock charts will demonstrate various bearish, bullish, and neutral or volatile price action during these respective time periods. That way, patterns can be seen in their own favorable conditions to demonstrate certain market sentiment during specific time periods. Some stock charts will show patterns with stronger or weaker effects, depending on factors mentioned before. Unique situations of failed patterns or strong trends can also be seen with this method of comparing individual stocks to the broader market. Progress is made with practice and experience, just like with the case studies. Stay sharp, and may your technical analysis skills progress.